Andrew's agreed to join Share Talk today on Red Rock Resources announcement to the market.
Yeah.
Acquisition and interest of Steelmin Limited. The back-to-back finance agreement completed.
Correct. Yeah.
Can you give us a bit more detail on what you think about the RNS today?
Well, I think it's a great asset. One of the questions we had was, we're in the steel feed business with manganese and iron ore historically in Red Rock, and our main steel feed exposure at the moment is through Jupiter, which owns the cheaply manganese mine in South Africa. Of course, 95% of manganese going into steel production, and we may be having a liquidity event there, either selling the GP business or listing it, which would give us an opportunity to sell out what's our very large exposure there in terms of our size. And that process started earlier this year and was announced by Jupiter, and it's coming to its culmination. So there's either going to be a sale or a listing, and that's going to be a liquidity event in effect for us, either direct liquidity or just a crystallization of value in having a company that's listed on the exchange where we can buy and sell the shares. So what do we do when we recycle, as we must, some of that money? How do we find something that is equally blue chip, equally good an investment, with good customers, with good management and so on? How do we avoid going down the quality scale, and what we then do? Because generally speaking, small companies like us on the market aren't involved with the highest quality assets, and the GP mine is probably the highest quality, one of the couple of highest quality manganese assets that are in the market. So we've been looking, and not easy, because we want to get cash flow, and we want to get high quality assets, and we want to get high quality management, and if possible we want to be within our area of operational expertise. And we were lucky enough to find this opportunity, which has many attractive aspects. Steelmin is a ferrosilicon producer in Bosnia.
I'm looking at the deal today. You've actually shown me some pictures of the plant. It's a big plant. Everything's in the infrastructure and everything's in place at the moment.
It's a huge plant. Everyone forgets that in the 1970s under Tito, Yugoslavia was being spoken of as a real coming country. It was industrializing fast and really quite advanced, and this was an extremely good plant that was put there. And Elkem of Norway put in the furnaces, and it made use of the cheap hydropower from the nearby rivers, and of course the wages aren't the highest. So with the main cost components of ferrosilicon being energy cost, power, and then of course labours being important, also cheap access to some of the raw materials. They have that in the Balkans. It looked as if it was set fair, but of course things happened in Bosnia, as you may be aware.
Yeah, politics, yeah.
Yeah.
It was crazy. Obviously the people will they watch this video, but they'll read the RNS themselves. But you're going to issue an 8-month loan note. It's over 3 million euros.
Yeah.
With a bearing interest of 13%, extendable for nearly 8 months for a fee.
Yes. So what we're actually doing is we know we have the money coming from Jupiter, or the ability to get money from that, or crystallization of value that will put our price up. So it'd be crazy to issue shares to do something like this. So what we've done is we've borrowed the money, 13%, and a 1-year term, then the ability to renew it for 8 months, and we've lent the money for 8 months with the ability on their part to renew for 8 months, also 13%. So essentially, what we've done is we've made a loan, we've secured it by a mortgage and debenture on all the assets, and we expect to get repaid, and the cost of the money we get from that gets passed through because we're borrowing it. So it's a straight pass-through.
It's a straight transaction, really. It's borrowing from one pot to give to another.
Yes, so there's a good match in many respects. I mean, a good match in terms of the quantum, a good match in terms of the interest rates and the upfront fees, a good match in terms of the renewal fees. Not a perfect match in terms of maturities, but a pretty good match there too. But what we expect to happen is that once this plant is in production, it'll be able to refinance with cheaper trade finance very easily, and will do so. So we'll get our money back, and so the cost to us at that stage will have been nothing.
Negligible, yeah.
Yeah, but we will have probably 20%, and if there's a delay, maybe up to 30% of this really substantial plant.
Because you've got in your RNS today, you've got this will increase to a maximum of 30%,
Yeah.
depending on the date of the full repayment of the loan.
Well, yeah.
So you could actually get 30% of this plant.
Yeah, I mean, here we are in June. If we reach the 1st of September, they haven't refinanced and given us all our money back, then we just have 16% of the plant. We got our money back very quickly. Well, for having our money out for a couple of months, to get 16%, that's not too bad of a big plant.
Not really, especially when I've seen the plant.
Yeah, that's going to be selling 30 million euros, and later maybe 40 million plus euros of product. If we go beyond September, it increases at 1% a month, so we'll be up at 20% probably before it's in production. And at that stage, it should be easy for them to refinance, but there's a jolly good incentive for them to do so, because otherwise we go up over the months to 30%. And so whether it's 20 or 30, it's a good holding that we would probably be interested in increasing and holding something between 25 and 30%. It's a good holding in something that has expansion capability. There are other plants like that in Eastern Europe that are good and where you can make reasonable margin.
So so to get the plant up and running, the produce you need, is it sorted locally?
Yeah, I mean
so basically the supply for the produce you need
there are
to
some
make the
contractors,
ferrosilicon.
for example, Austrian contractors. There are contractors. A lot of work has been done, particularly on the filters, the filtration plant, scrubbing, cleaning the gases, and that's to make it compliant with EU regulations. So it'll be EU compliant in terms of its environmental.
To become operational in land.
Yeah. A lot of money has been spent on electrics and all the systems and piping. So there is.
But you've got the water. Sorry to interrupt you there.
Yeah.
The images I've seen, you've got the water structure next to you, so the hydro electricity is generated next to the plant.
Oh no, that's a substation, but it comes.
So the substation comes from the water.
Yes.
Yeah. So it'll keep your costs down for the electrics, because that's going to be a big cost.
Because not only will the electricity be quite cheap, but the transmission cost should be low because we're so close. So we'd expect.
Because you'll be reliant upon electricity, obviously, to run the plant.
And I think it's a decent plant. I mean, because your main cost is electricity, and electricity costs, of course, are correlated to economic growth much more than to variations in commodity prices. This is more like an industrial commodity, so you get an industrial commodity type margins. It ought not to be excessively volatile. Once or twice in the past there has been volatility as a result of dumping from China, which now can't take place. But it ought to be a sort of steady industrial margin. Now, do you go in and look for steady industrial margins if you can find things more exciting? Maybe not, but if your entry cost is really low, then why wouldn't you do it? And in this case, if we get repaid properly, and we think we're well secured, so we will get repaid, we end up, one way or another, with a stake whose entry cost is pretty much zero, and so the return will be highly attractive.
I shouldn't really say this on camera. You're lending the €3,874,000. You're going to get paid it back.
Yeah.
And you're going to end up with a part of a plant.
Yes. Yeah, that's right. And you can't even say that we're using some of our equity.
So you're not actually
and all
spending
we're
it.
getting is a debt return on it.
That's what I mean,
Because
yeah.
actually we're borrowing money in
It's
order
coming
to
back.
lend money. Yeah.
And
So
even
we're
if it
not
doesn't come
discouraging.
back, worst case scenario, you could end up with a full plant.
Well, if it doesn't come back, then we end up with more of the plant, and I think that would be worth more. But also, we have other sources of finance, both Jupiter dividends, gold royalties, and other things. But also, you've got to look at Jupiter as a capital asset, which is going to be relatively liquid, perhaps very liquid, perhaps just cash within an extremely short space. So we've already addressed the issue of how we use some of that money.
Yeah, the finances, yeah.
Yeah, and where with good quality people. I mean, the managing director of this plant is an ex-Goldman Sachs executive, and he's got a good business record. The technical guy there was involved with the plant at the beginning of its life in the 70s. He's worked for BHP and other people overseas. He's a professor at the local university. He's written a book about these plants and how they work. He's an expert, so he's been on this project for the last few years. You have a good team of 45 people working on it. It's at the last stages. They got held up a bit, I think, by a property dispute over some of the land. That's been resolved, and now we're putting in the last dollar before it gets into production. But the people who went in hoping to make quick money in this in 2011 or thereabouts included some well-known financial institutions and well-known high-profile individual investors who've all got a bit sort of long in the tooth and wary of it, and maybe not inclined to put money. We had this incredible opportunity to come in and do something, which it had to be done quickly too. First, because in order to get into production this year, you want to have, you've got your order back, your time lag of about 5 or 6 months, you've got your construction period on the different things. You want really to be in production before the cold weather comes in January, February. And you also had to clean up that property situation, because under the agreement a payment had to be made by the end of this month. So we just happened to be the right people in the right place at the right time.
Well, I just, again, referring to the RNS, the first trench of over €2 million will be paid in balance due in 1 week. So you're moving, this is moving fast.
We're moving very fast, and they're putting in the orders already, because we've already made payment of most of it. So
you must be a happy chairman today.
Well, I'm really quite positive about this, because we don't know what we're going to do with all the Jupiter money, but this is some of it applied to something really worthwhile. Ferrosilicon, maybe there'll be even ferromanganese as one of the products down the road, and other sort of alloys. So we're not getting away from the area that we basically know. The customers of this, there's a letter of intent from ThyssenKrupp. There's expressions of interest from Mittal and other major customers.
Yeah,
We're
major
dealing
players,
with good quality customers. We're dealing with good quality management here, and you've got what has always been one of the better plants around in Europe.
And it is in Europe.
Yeah.
And when we publish this video, we'll put the RNS out, and if you kindly share some pictures.
We can do that.
And we can show the investors.
But also, it would be great to take investors out to see this, because it's only 1.5 to 2 hours to fly to Zagreb.
Yeah, then, excellent idea.
Across the border into Bosnia from Croatia, and up into the hills, 3.5 hours or so, and you're there and you can see it, and beautiful, beautiful countryside.
But I've seen the images in the village next to it. Looks quite nice. All right, thanks very much for giving your time today to talk to Share Talk.
It's an interesting thing. Of course, it's not the only thing happening at Red Rock, but it's a partial answer to one of the questions that's out there, and we're very excited about this development, and I hope it shows people that we're going to make considered investments and not going to waste the money, as we're given a little bit more flexibility by the developments at Jupiter, and also shows people that we're going to be very, very chary of issuing stock, because we think we have a great cash flow story, and if you're going to be in a position to generate cash flow, the last thing you want to do is be issuing your shares, because as shareholders ourselves, we value them. We want those shares to increase in value for each one. And we've been through several years where it's been very tough times in the mining industry, particularly been tough times for people who didn't have native, reliable, consistent cash flow, because they found that they were having to issue shares.
Yeah.
And we had that experience. It's not one we want to repeat. And I think that it's something we've learnt is the kind of business we really want to be in.
That's great. Thanks very much.
Thanks.